Are commodities undervalued? Hi, everyone. I'm Maggie Lake, and today I'm talking markets with Mish Schneider, Chief Market Strategist at MarketGauge.com. Hi, Mish. It's wonderful to have you back on.
Oh, it's so great to see you. And when we finish our segments together and I look on the comments, there are so many comments about the rapport between the two of us and how much fun it is. So I really always look forward to being with you so that we can really. I think you bring out the best in me. I think you do that for everybody, but I can speak personally. You certainly do that for me.
Oh, thank you so much. What a good way to start. And Paul is agreeing because he said, oh, good, some sunshine from Santa Fe today. And that is right. We can always count on that. So let's jump in. We had modest gains in equities to kick off the week. And we saw bond yields, move a little, but not much. It seemed like every headline today said investors are waiting details on U.S.-China trade talks. Like it just was cut and paste and slapped onto every single story, no matter what market you looked at. What's your sense of what sentiment is right now, Mish? Does it seem like the path of least resistance is higher for equities, or is this a market that's still very much vulnerable to sort of setbacks and negative headlines on tariffs?
Well, I'm going to bring back a word that hasn't been used in a while, which is bifurcated, right? Because most of the gains over the last few weeks have been just about 10% of the market. And, as much as I love granny retail, right? And we've talked about that for months and months and months. And actually in the Modern Family outside of semiconductors is leading. It's still, if you step back to when it peaked in 2021, the retail sector is still about 30% away from its all-time highs, with the Qs and the SPYs so close. So that just gives you an idea that if you look underneath the hood, the consumers are certainly not disappointing the way many expected at this point because of tariffs, et cetera, higher costs. But they're not exactly coming in like gangbusters to buy on every level like they were doing after COVID in 2021, which was the peak. So to me, that I still think the consumer sector has to be watched, because ultimately that's what's going to drive the economy. We know growth stocks, everybody loves them, but we're not at the point yet where we can say it doesn't matter how people spend money or whether they spend money. It's all about AI and tech. I don't think we're quite there yet.
So yeah, it is interesting, and there's so many cross currents. So let's break down sort of different asset classes a little bit. We started out with the T's, but you like commodities here. Talk to me about that.
Well, what's interesting, well, first of all, I always look at commodities, right? Just old habits die hard, considering that's where I started out in life, in a commodities exchange. And I know how fun commodities can be when they get going, because they're emotional. Their fundamentals may be somewhat ephemeral, but when that happens, there's so much money to be made, and asking too many questions is dangerous. You just want to follow the trend, right? And a classic example, of course, is the gold to silver ratio, which we spoke about last time, and what silver has done over the last couple of weeks. So what's interesting is the last time I was on with you, Maggie, we talked about that comparison of October 2022 and April 2025. And that was when in October 2022, the gold to silver ratio had peaked. At that point, it was 95. In April, of course, it was 107. But the point is that we started to see some of those parallels where we saw the ratio was peaking, number one. Number two is what happened after that. Silver actually started to rally in 2022, just as we've seen in 2025. The dollar's got a little bit weaker. I think there's been a major breakdown in the dollar. That does not necessarily mean we won't see little rallies, but we could talk about that later. The bonds, the TLTs bottomed then too. If you recall, that year was the year when the Fed was so aggressively raising rates. And even though they didn't do anything to drop the rates, just the perception that they were done raising them was enough to get those TLTs to rally. And what happened with the SPY at that point is it bottomed, but it chopped for a while until 2023, really spring. So if we go here right now, what that's telling me is what we have a little bit different this time is we have different headlines, right? So we have silver outperforming now for real. Obviously, it still has ways to go to the downside to be alarming, but we also have oil sneaking up here. Everybody was so freaking bearish in oil. We actually bought it once it cleared $62 a barrel. We have copper going up. We have live cattle on all-time highs. We have some of the grains, particularly the soybeans, looking like it's starting to base. On top of the fact that we have some issues, right? Geopolitical issues, things going on in the Middle East, things going on with Russia. We have a summer season, some predicting drought. We still have high debt. We still have a lot of spending. And we still have the tariff impact, which I don't even think we've begun to see what happens yet. So all of that tells me not every commodity, but a lot of them are undervalued.
That's so interesting because the focus has been really only been on gold, now a little bit silver, but everyone ignoring the rest of that basket. And as you point out, kind of leaving it for dead. And I'm glad you mentioned geopolitics. So anybody, I always think in the summer, weekends are crazy and the news flow is crazy. If you haven't had a chance to watch the conversation I had with Jacob Shapiro and D. Smith, I encourage you to, because understandably, it's so hard to digest everything that's going on, but they made some really good comments about not only the risks out there, but also the opportunities. And I love Jacob saying that you can't make money in a fetal position, right? It's true. You have to be sort of doing and looking and not just shut down on the news flow. So go ahead and take a look at that and go down that rabbit hole if you haven't, because it was really in the wake of Operation Spider's Web, which was a real game changer according to them. So check that out. And hi to everybody in the chat, watching live on YouTube and Substack. I was so excited to jump in with Mish that I didn't even say hello, but super happy to have you here. Go ahead and put your questions in. We'll get to as many as we can. So, Mish, your point about these commodities, when they move, you're really looking at this from a price action point of view, more than a sort of sounds like more than a fundamental narrative point of view. And is this a shorter term trade? Like, what time horizon do we have to think about here?
Well, I think I'd have to say a combination of both, because let's talk about energy for a minute and energy demand. So while we're seeing this tremendous boom, and I read that there are more and more and more AI data centers being built everywhere, we know the energy demands for that is huge. On top of, again, the seasonals, because we don't have a grid system in the United States that has been tested in long periods of drought or heat, like in Texas. That's already a factor. We've had, stormy weather anyway that has put some pressure. So from a fundamental standpoint, the energy demand is huge. And where is that energy coming from? So there was this big move in uranium, right? So uranium, I actually bought it more from the price standpoint because I had heard hints of nuclear energy being put on the table. And that's what we talked about last time. I bought it at like 20 if you're looking at URA. As we know right now, today it went over 35. So that's only in the future thinking that we're going to go that way. But we're 5 to 10 years out easy in being able to actually tap into nuclear energy. So where else is the energy coming from? So believe it or not, solar and wind in the United States is number 2 behind natural gas. Natural gas is plentiful, still pretty cheap. But what's happening now with the solar and the wind energy is that even though the government is talking about cutting the subsidies, it is something that has gotten cheaper. And so the subsidies may not be necessarily as important as they were in the beginning. And we're starting to see some of those solar stocks go up and some of the other things related even to EVs. We'll talk about that later. And then oil, right? So oil is behind. So it's natural gas, solar, wind, oil. And what's happening in the oil market is also fundamental. Outside of the Middle East, we had the rig count go down 6 weeks in a row because producers in the United States do not want to drill or refine at these very cheap prices. So those are the more fundamental reasons. It's not like I'm looking at some kind of a hyperinflation environment. I think we can have these pockets, and I think energy, I'm calling it all hands on deck, right? Every source of energy is needed. I don't really like to look at coal because it just is not, from a more socially conscious, it's not something I really want to buy. Natural gas hasn't really broken out yet. So that's the other one. I'm looking at 380 as a kind of a point we haven't gotten to. So my bigger point is if you look at a chart, and I think I sent you 2 charts of the commodities equities ratio. Now we'll go more technical.
Yeah. We'll see if we can pull them up.
Right. With the tariffs, with the geopolitics, with the energy demand, and who knows, if we have a deal with China, that could be actually bullish for certain commodities as well. And we don't know whether that's going to happen or will it be sustained. But essentially what we're seeing right now is that in the ratio, there could be a reflation type of situation in some of the commodities because in the cycle, we are well off, obviously, the potential of recession, but we're certainly nowhere near a period where the equities and the commodities are in sync. There's still a big spread between the two of them. So we have room, and it doesn't necessarily mean that the equities have to go down, not initially, but it's possible that at some point that flips. And there are so many variables we just don't know. But for now, I'm not too worried about that. I'm more interested in the idea that raw materials are, the things that we need for things is my focus.
Right. I don't know if I have it set up to share without the whole thing blowing up. But I will work on that. And then if I can get it up, I will bring it back up. If not, we'll share them. We'll drop them in the chat.
Okay, well, if you're going to take a choice of the two, I also sent you the gold silver ratio.
Gold silver ratio.
Because we already talked about that. That's an amazing chart to look at right now.
Yeah, there's been, we caught up with Dale Pinker too, and I know you another one of your commodity colleagues, and he was also really looking at that chart. And we've been getting questions about that as well, because it really started to take off. So let me get this question in, because it's a really good one. And as I said, feel free to drop them in. No one knows thyself asking, how are commodities undervalued? China being the largest consumer of commodities, their economy is in the gutter. We need commodities to be consumed for prices higher. It's an interesting question about China, because I'm listening to you talk about commodities, and maybe because I am having a million calls about an energy conference I'm going to do at the end of June. And I'm hearing about just the insatiable demand for energy that's going to come from everything we're doing, and the compute power needed, not just for AI, but sort of for all sorts of modern life, sort of everywhere. So that's what I was thinking of. But the China question is an interesting one. Does that factor in? Does that matter?
Yeah, well, I'm not sure where the China economy is in the gutter comes from. I don't see it that way at all. First of all, China has really emerged actually as an economic power over the last 20 years, developed a middle class it didn't have, pulled itself out of abject poverty. Now, whether or not it's taking a little bit of a dip right now, in China's terms, they don't think of it like that. They're very long view. And in their long view, what they're doing is they're really trying to make sure that they can feed their people, 1.4 billion people, number one. Number two is they're also obviously doing a lot in terms of solar energy and alternative clean energy, so that they're not so oil and coal dependent. And number three is they're making deals all over the place in regards to that. If you're talking about the real estate aspect of it and the ghost towns, yeah, but China's a very different country than we are. They could basically ignore those pockets and pivot on a dime to build where growth is going. And that's what they've done. So I talk to people in China all the time. So I don't think any of them would say gutter. But to look at the question more moderately, our dependency on China, obviously that's what this whole trade war is about. We just saw today that the imports from China are at near record lows in terms of what we're bringing in from China. Is that affecting the Chinese economy? Maybe, but we're not really seeing the impact of that. They're certainly playing hardball with us as if it's not really as big an impact as we would like here to think. So in terms of their commodities demand, I don't see it going down. I don't see them going into recession. I actually think that they're pulling themselves out. And like I said, the deals that they're making with Europe, that they're making with the Middle East, who knows what they're doing with Russia? I'm not really sure. I'm not an expert in that area, but I do know that I would not underestimate China's ability to grow.
Yeah. Great point. Andrea asking, I like that you include me in this, Andrea. Would any of you ladies put money in Palladium?
Well, platinum has certainly made a very nice move right now. I haven't really looked very much at Palladium. When I trade futures, I'm not trading futures anymore because our clients in our asset management company are not really into doing the futures. They want to do ETFs. And the Palladium ETF has such low open interest. And so, maybe it trades 3,000 to 5,000 a day, that's not something I'm likely to look at. So I've kind of ignored that. I'm happy to look at it another time. But what your real question is will the silver, gold, and the metals branch out to some of the others like palladium, and we're seeing in platinum and even copper, which has to get through $5. And then once that does, that looks like a big breakout. That's what I'm talking about, is you have to be selective, and you have to realize that we in 1979 saw commodities take off only in pockets. It was not every single commodity. So I think there's a misconception that inflation, first of all, has to look like a lack of recession. No, we can have recession and inflation at the same time. And B, that it has to be every commodity under the sun. So watch DBA and DBC, because they're basing, they haven't broken out yet. Like I said, this is not a runaway situation, but I love the risk here. Like I said, bought oil, bought uranium, have silver, have gold. Obviously looking at natural gas, but not in yet, looking at soybeans, but not looking at, and looking at DBA, DBC. And if they start to bust out, you know right away if you're wrong. It's harder in equities right now, especially if you're looking at the growth stocks, I think.
Yeah, great point. David commenting, to paraphrase Doomberg, energy is life, energy is the economy, which is a good point. That's everywhere too. So want to shift to another area that's been really hot as we've sort of watched against the macro backdrop. People try to, figure out how to counter some of the concerns about what's happening in the bond markets and the dollar. And we'll try to touch on that briefly, but we've seen gold on the move, and we've seen Bitcoin on the move. What's your thought around the price action there? What do you think about the levels we're sitting at?
Well, first of all, the IPO that we had with the stable coin was impressive. I mean, you definitely have to be impressed with how much that went up on the first day of the IPO. And essentially what that means, eventually it'll be like a credit card type of situation where you can use stable coin to pay for things. But really what that is, a mass adoption, just increasing in the cryptocurrency space. And that has to be bullish for Bitcoin. And so right now, when it dropped down, well, it was like that 1 second day of Tesla and Musk and Trump having their fight. It went down to 100. That was kind of a gift. I thought it could stop at 102. It gave you a little chance on Friday, and now over 107. That's
a big rebound.
That's a big rebound. And it tells me that there's a lot of people out there willing to put money on the table with Bitcoin. And now that it's over 107, I don't see any reason why I'm not going to go to the Tom Lee, 2 million, 3 million. Those are just outrageous things. But I could definitely see maybe originally 125, I thought. Now I would change that maybe to 135, 140 is possible. It has everything going for it, including a very pro crypto administration.
Yeah. Administration that's focused on a lot of things currently right now, but that is true. And just a reminder, we were always recommending friends of ours and friends of show, stay up with Noelle's newsletter, folks. Crypto's Macro Now. She's all over the incremental changes, and not all the headlines that seem super positive are actually translating into action. And then there is some real action happening in some places. So make sure you keep up with that. We had a question early on from Muddy here asking if you are still bullish ETH. Are you watching ETH? I felt like ETH was dead for so long, and then it sort of had some action, and there was kind of a halo effect, and we saw some price improvement there. I don't know. How is that ranking up? Is it worthy of something on your dashboard?
Well, I wasn't really paying much attention to it, actually, though I just noticed, and I love to look at volume patterns. Essentially, talk about technical analysis. The cryptos are usually so technical. It's a lot of fun. And Ethereum right now, we just got over 2,500. We're actually getting closer to 2,600. And if you look at over the last month or so, there's this massive consolidation happening. But what happened today, to answer your question, is that I like to look at volume. So there was a volume spike. So what I mean by a volume spike, in that we had a accumulation in volume, which means that today's green day, the bar of volume was exceeding the day before, which was a red day, right? Or at least a sort of a non-active day. So that tells me that money's starting to come in. And that's what you want to see, right? You want to see asset allocation, capital flow. And that's what Ethereum is doing. you're in a chop zone here, but it looks like if you clear this consolidation, I think why not? That could go back up easily, at least to 3,000. Then we can have another look.
Yeah. So we're making our way around. Let's keep going. This is fantastic stuff. Interesting. So we talked about the two markets that have really been moving, and there seems to be just a lot of interest, and every time there's an opportunity, people are putting money to work. One that is a little bit more controversial and gets people hot under the collar is technology, right? This was supposed to be the end of Mag 7, the end of, by the way, US tech companies leading the way. There was a part of that was feeding into the rest of the world, end of American exceptionalism. I think there was a bit of crossover with those narratives. And yet we see tech performing really well. And once again today, NASDAQ is the best performing index if we look across S&P and Dow, certainly, and Russell as well. How are you feeling about the tech sector here?
Well, I've kind of switched my gears a little bit into quantum computing stocks. And so that gives you a lot of fun right there. I mean, we just saw IBM, which was one of my top picks for this year, is done amazingly well. Microsoft, which was kind of dead for a while, doing amazingly well. And if you want to go much smaller than that, quantum computing, QUBT, is also today made a really nice move, about 6% higher after basing out. So, I always like to use my mom, because my mom told me to buy NVIDIA at 86, right? So mom actually said to me, yes, and because she has a different perspective, right? So she said, I still think NVIDIA is going up, and she's probably right. So we should
note for the record that Mish's mother is 91 years old.
Yes.
91 years young. Amazing.
But she also told me that same day, she told me to buy NVIDIA at 86. She told me to buy Bitcoin at 78. Now, I listened to her on Bitcoin and not on NVIDIA, but that's a different story. Anyway, the point is that I do believe there's upside, but the problem for me as a trader is I really need to know what my downside risk is. So I'm going to talk to you not from the generational buy opportunity and what you hear from long-term investors who don't mind sitting through a 10, 15, 20% decline. Not that I'm saying it's guaranteed to happen, but we know it could. The reason why I bring up that retail space is because every time, now small caps had a nice day today, so that's good. Transportation is still underperforming. Those three inside sectors, if we're 30% away from the all-time highs in retail, if small caps are still, I think the high in small caps were what, 224, and it's trading up at 214 today. That's still a nice percentage move it has to make. And transportation is also really lagging here. What has happened time and time again is people keep running into that space, and then those inside sectors, at some point, those investors turn around, they see the rest of the market isn't keeping up, and then there comes a headline, whether it's China headline, that happened in the DeepSeek that happened in the beginning of the year, or if it's a tariff headline, or it's a regulation headline. One thing to be aware of is in this big, beautiful bill, they're arguing right now on having no regulations on AI or not. There's a lot of controversy about that. What I'm saying is we never know what the headline is, but those classic tech stocks right now, to me, are probably not as great to make money right here.
That's it. You're looking for where the upside is. You see more downside risk than upside risk. In some of these others, you see a lot more blue sky that you have to run. That makes sense.
Now the rocket companies and the space companies, I mean, they remind me of every other trend for the future. When they catch on, people run in, the retail space loves to buy, and then ultimately it turns into some kind of a massive correction in the works when the reality sets in that we're still far off. I'm actually surprised it hasn't happened at uranium yet, but I think that's partly because of Iran right here. But anyway, that's my feeling. That doesn't mean, though, that there is an upside. So I don't want people to get the wrong idea. I'm all about, like I said, the quantum computing right now really interests me. The commodities really interest me. And the mega trend that I've talked about over and over and over and over again, and that is the vanity trade based on the diet drugs. I still think that is the hottest trade out there. This is going to impact real people who spend real money, AI and tech is not going to help their lifestyle until they're thin. You know what I mean? It's like maybe the last thing they'll spend money on. I'm watching these stocks. Novo Nordisk has been creeping up. Ulta and Elf reported recently. They did unbelievably well. You've got Match.com all of a sudden starting to look good. What is it? The bike, Peloton, that all of a sudden making a move, Planet Fitness making a move. You've got to watch, and if you just watch these commercials, they're like every other one, by the way, on what's happening in that space. Hims is another hot stock that because it's Hims and Hers. The commercials for Hers are all about weight loss, skincare, new skin, everything has really started to emerge. And we haven't even seen anywhere near the peak of people who are going to start using these drugs, not just to lose weight, but they're also really having great results for diabetes.
Yeah, well, because we know obesity, there's such a link to obesity and diabetes, and you have been looking at this for a long time. I mean, I don't know if it's a year, but you've been on this early, Mish. And by the way, I think we all, like, show of hands, that you just bumped into somebody you haven't seen in a while, and you can't even recognize them. I mean, it's like a miracle. It's unbelievable. They look like they've completely transformed. So it makes sense for me that they would want to then and need to participate in things with that new self, whether it's, sort of enjoying their new self or just needing to buy stuff because they literally are like a third of the person they were. My only question is that still true if we get a recession or if times are tough or things go down? Like, do you then, especially if it's a kind of treat yourself type thing, does that then take some of the shine off that trade?
Well, it's a great question, Maggie, because there's the lipstick trade that is really good in a recession. Right, because makeup is
small luxuries that you can afford.
Maybe people aren't going to go to buy Chanel, but they will go to Ulta or Elf, like we're seeing.
And Elf is low price point.
Exactly, very low price.
Those of you who might not be shopping and know this, we can confirm, especially since I have a daughter, that that would be accessible still.
Well, and also they just aligned with Bieber's wife, right? I'm sorry, I can't think of her first name. Yeah, but people were like online to go buy those products. So yeah, I think in some way it's recession proof, because I think if you have had struggles your whole life with weight and now all of a sudden you have a new lease on life, you're going to cut back on things that you might have spent money before to have money for the things you want to do. Food and alcohol. Alcohol, Jim Beam, I think it was Jim Beam or one of the big alcohol companies, they sank last week because people now losing weight are not drinking.
Well, one of the effects of that is it also curbs your appetite for all things, not just if you have a food issue, but also you don't want to do lots of other habits that can add to the weight or a bad lifestyle. So
right, and exactly, and then of course, right. So fast food is another thing. So that's the way.
So they'll redeploy. It's a shift in spending as opposed to having to spend extra.
Right, and it brings a percentage of a GDP in that we haven't seen before because of the incredible numbers of people who have been statistically obese, right. 38% of the country. So just take 6% of that and just think about what the money they're going to spend on. That's incredible to me.
So it's this sort of second effect, right? We know that people have been really keen on the drug companies because of that. Right. But now we're talking about the knock-on effects through the economy, the domino effect. So interesting.
Just watch the commercials and see what these people that they're showing are spending money on. Zip lining. I mean, oh wow, because now I'm not so heavy. I can actually go on a zip line. I can actually take my kids places I couldn't take them before. It's a little bit of a study to see where they're going to go with the money, but that's what you want to follow. And by the way, there's a stock. It's interesting. In 2021, when retail peaked, I went on Fox with Charles Payne and he asked me what I thought of Stitch Fix. You know that company?
Yes, you've mentioned this before.
Right. And I said to him, no. I mean, to me, it would be a nightmare to get clothes and constantly have to return clothes, because that's what they do. You fill it out and they just send you stuff. Well, all of a sudden, following the diet drug commercials, I'm looking at Stitch Fix commercials coming back on. And I'm thinking, if you don't want to go into a store, or you're too embarrassed, or your skin is now saggy, but you look better in clothes, or whatever it is, if you're not quite out there yet in going shopping, or you want to save money and you want to have somebody to design for you because you've never really cared about how you looked from a fashion standpoint, and that's what these commercials are all about. That stock right now is trading at $475. This was a stock that was trading $113, right? So it's basically a flatlined since 2022, flatline. So that's when I get interested, right? So, this is why I can have these conversations about stocks like NVIDIA versus stocks like this. If this thing gets over 5.25, 525, 5.15, I think that, what that is telling you too is that there's a new market emerging into companies like that. And that's a very well-known company. And also anything that celebrates diversity is also something to be looking at. That's where ELF is coming in, of course, and now Stitch Fix came on my radar.
Yeah, even though in other circles diversity is a bad word. I just want to make read a couple of these comments and a question, because I think they're great. MC saying Mish had a great HIMSS call. Absolutely. And thank you for pointing that out. I want to, of course, remind everybody that this isn't financial advice from Mish. She's just kind enough to share her thoughts on stocks. You're going to do your own due diligence, but this is the best one. Cosmo, is there anything Mish doesn't know? No,
honey, yes,
no, Cosmo, I will tell you. Rarely can we stump Mish. And if we do, she's honest enough to actually say, I don't know, which is one of her superpowers, and how she doesn't get stuck in bad trades. So let's wrap this up, and just so sort of appreciative that you went through all your picks. Let's end with the two worry spots. And I don't necessarily need you to walk us through the levels because we don't have time for that, but we talked about the bonds and the dollar, that every time yields spike, it was causing a problem for stocks. Looks like they've been overlooking it, but we haven't seen anything really bad on that front. We haven't seen a really sharp move in treasuries. Are those two markets that are leading, or are sort of investors putting them to the side right now?
Well, what's interesting is again, talk about ratios. I love looking at ratios. The ratios between the dollar being down and the yields being up is also classically high. Right? Because most people think, oh, interest rates go up, dollar goes up, and that's not what's happening. And of course, we don't have time to really talk about all the reasons why, but clearly emerging markets, which are doing better than the US market, has something to do with that. So in terms of that, again, let's go back to that 2022 comparison. It was a long time before the Fed did anything really, but it was the perception that they were feeling a little bit more comfortable about not raising anymore. And in this case, 2025, about inflation being cool enough, about hoping that the tariffs are not going to be as impactful. I'm not even looking at the geopolitics. We're coming into PPI, CPI this week. Personally, I believe that they may have bottomed, but we'll see what happens. But essentially, all it is needed is the perception that the Fed is feeling slightly more dovish, however that looks, and that's enough to get the yields down. So that's something to look at, number one. And then number two, in the dollar is a double-edged sword. We like a lower dollar in one case, but at the same time, purchasing power goes way down. And the dollar right now has had a 6 to 8 year business cycle breakdown. Like I said in the very beginning, it could go up a little bit, but that doesn't mean that the trend is reversed. It's like everything else. We can just see some short covering or some knee-jerk buying.
These are waves in a downward,
But it is going down. I'm pretty convinced, unless we see a move back over 100 in DXY, I'm pretty convinced that we're in a downtrend. So essentially, the Fed will be watching that as well. I always say I don't envy them, because right now they're looking at stagflation more than anything. But if, like I said, if history repeats, the Federal Reserve will sit tight and intimate that they're looking, at least, they don't want to see yields go much higher than they were at their peak. So, 4 to 5.5. Maybe we see at some point next year, 2026, 3.75. But that's what you're looking at right now. So
perfect. Mish, so much fun. Regreen, yes, we talked about soybeans. He was asking if we talked food commodities. He's late, but you can watch it on replay and find out. But such great stuff, Mish. Thank you so much. It's always so great to catch up with you, and feel free to take notes. Feel free to leave a comment. Mish looks at them and will respond. But take notes, because she's been nailing a lot of these calls. And so it's really interesting time, especially if you start seeing action in commodities, which is really your wheelhouse. So it's going to be really fun.
Keep your eyes on
She's not
oil.
putting anything but coffee in that mug. Christopher loves your big mug. She needs to stay hydrated.
Acoma Pueblo.
Great stuff. All right. Thanks, Mish. Thanks, everybody, for joining us. We look forward to seeing you again on Wednesday. In the meantime, take care and good luck out there.
Thank you.